know how to dance with the trend? Welcome everyone to Traders of the World, our new interview show where we bring inspiring stories about the financial market and incredible guests. I'm Professor Flávio Lemos, chairman of the Brazilian local chapter of the CMT Association and also author of some investment books. We are speaking English because we want this show to inspire new traders around the world. I hope you all like it and subscribe to our channel. Great! I'm certain that we'll have a wonderful conversation with our ultra mega special guest. And speaking of our guest, he has a 50-year investing career as a technical analyst, a developer of indicators and trading systems. He holds a bachelor degree in aerospace engineering from the University of Texas, authored numerous investment-related articles, speaks at numerous seminars and investment groups, and has appeared many times on Financial News Network, Fox Business, CNBC, and Bloomberg TV. Whoa, that's what I call a resume. What else can I say about him? Well, he came first to the Expo Trade Brazil in 2008 in Rio de Janeiro. Then, 10 years ago, he gave me the honor of writing the preface to my first book, Análise Técnica Clássica. I was very grateful. After all, he is one of my perfect authors. You probably know his bestseller book as Candlestick Charting Explained, Candle Power, The Complete Guide to Market Breadth Indicators, and, of course, Investing with the Trend. So, let's dance with this trend. He was a Navy fighter, Top Gun pilot. After several years of awesome work managing some billions at Stadium Money Management, now he enjoys semi-retirement as a golf player and kindly agreed to give some precious minutes of his time to this interview. Please welcome Mr. Gregory Morris.
It's a pleasure to be here.
Greg, thank you so much for being here. Your wisdom and experience as a trader is of immeasurable value to new generations. Please extend our gratitude to Laura, your children and grandchildren. Greg, regarding this, what challenges did you face in transmitting your passion and knowledge to the succeeding generation?
I think I probably have 4 or 5 master's degrees in what not to do when it comes to investing. If you continue to fail doing the same mistakes, you're really making that's a really bad way to do things. And I found out that I was not a very good trader. Linda Raschke is a gifted trader. I just didn't have that gift. And so I had to come up with a trend following system that took my feeble brain out of the process. In other words, it's trend following with stops and rules, and anybody can run it, but you have to have the discipline to run it. And discipline is a critical element when you come to trading and investing. I used to tell a story about Laura and I were driving up in the mountains, and I'd been on a diet for many years, and we stopped at an old filling station where you couldn't pay at the pump. You had to go inside to get the gas, pay for the gas, and I buy myself a candy bar. And I'm walking back out to the car eating this candy bar, and she's kind of glaring at me through the windshield, and I get in there and she says, "You just don't have any discipline." I said, "That's not true because you don't know how many of these I wanted."
That's great. Nice. So, Greg, have you presented the tools of technical analysts around the world? So tell us about your beginning as a technical analyst. How did you fight from being a Top Gun fighter to the markets?
Well, even when I was a Navy pilot, I was interested in the markets. And like I said, I made a lot of bad decisions until I found out that I had to come up with an automatic system to be successful. I had software back with N Squared Computing, Norm North. Norm has passed away now, but we created software in the 80s, and John Bollinger and Bill Griffith on FNN really liked the software, and so I was on FNN in the mid 80s for probably 6 or 7 hours over the course of 3 or 4 years, and that kind of took us out of the bedroom into a small business. And it just kind of flourished from there. I stayed in the software business for quite a while. Then I got into the internet with John Murphy. John Murphy and I joined up as partners with murphymorris.com. And it's kind of a funny story. We set up the company, murphymorris.com, to educate investors. And I started reading books, and like I said, I was an aerospace engineer. I didn't know anything about marketing or sales or any of that, but I started reading marketing and branding books, and I realized that instead of educating investors, my product was my partner, John Murphy. He was on CNBC all the time, and so I turned the whole company around and just started selling John Murphy, and the business just took off. We ended up selling the company in 2002 to StockCharts.com, and then we both wrote for StockCharts for many years. John still writes for them. John, I think, is in his early 80s now. I'm 75, so we've kind of slowed down a little bit. I don't know if I answered your question or not.
Yeah, you did.
Okay.
In your book, Investing with the Trend, you talk about many things we have learned in regard to investing that might not be true. As for example, buy and hold is the only way to be successful in the stock markets. Diversification protects against losses. Do you think there is still a lot of misinformation in the modern finance? Do you believe in experts' markets forecasts? Don't your clients expect you to have the answers?
I think modern finance is a hoax, and here's why. It's very simple. Modern finance says that volatility is risk, and risk is defined by standard deviation, or sigma, as they call it. Well, anytime you mention sigma or standard deviation, you're inferring that the data is random. Well, the stock market data isn't random. It trends all the time. In fact, the second part of my book tries to prove that markets trend all the time. Now, there are periods of whipsaws and things like that, but they just have to live with them. So modern finance is, I call it the marketing department for Wall Street. It's a farce.
Okay, so Greg, how about you first met and came to this relationship with John Murphy? At the time, he was a former CNBC analyst. Could you share with his history, how you first met him?
Actually, it was before CNBC. It was we met at Financial News Network in the green room. John Bollinger and Bill Griffith were interviewing me, and then following me was John Murphy, and we just kind of hit it off. And we just stayed in touch all those years, and then the mid 90s, I had this idea, like I said, to educate investors, and I approached John about starting a company together, and we did. Like I said, we ran it for 7 or 8 years, very successful. Sold it to StockCharts, but yeah, we met in the green room out at 2525 Ocean Park Boulevard, Santa Monica, California. That's where the old FNN offices used to be. It's an old bank building.
Considering what is hidden by market statistics, what is the main difference between uncertainty and risk? What are the lessons you have learned from failure and bad trades?
Well, first of all, learn from your mistakes. And if you don't, you're in trouble. Don't repeat them. I had to learn a process that I was comfortable with. I was never a good stock picker. I had no process for picking stocks. I just, and you don't ever want to listen to the experts. An expert, Mark Twain said, an expert is a damn fool a long way from home. So But you have to find a process that works for you. And of course, that led me to technical analysis. Fundamental analysis is a great thing to tell some old person who's retiring that, oh, the earnings are good, it's got a high PE ratio, and it pays a dividend, blah, blah, blah. That doesn't mean the stock's going to go up. It just has all those numbers associated with it. And almost all financial ratios, fundamental ratios, have price in them. Price earnings, price sales, all that. They all involve price. So why not just be a technical analyst and use price and just analyze what the price is doing? And that's what technical analysis basically is. I do think I see a lot of young technical analysts that get a little carried away with the art form, and they don't really make investments from it. They're more interested in drawing lines on charts and talking about them. I never used, along the lines of chart analysis, I never used angled trend lines. You know, where you connect 2 or 3 bottoms. I just think that's just corny at best. Horizontal trend lines, which are based on price, that's where you get support and resistance. And there's a lot of indicators out there. There's probably way too many. I remember challenging Larry Williams back in 1980 when he came out with Williams percent R. And Larry's a very good friend of mine now and has been for 40 some years. And I said, Larry, percent R is nothing more than the complement of percent K. He said, I know that, but nobody else does. So there's a lot of people using indicators, but they don't understand what they do. And I think that's a terrible thing to do, is to use an indicator, not understand how it works and what's calculating. I think stochastics is, George Lane used to talk about it all the time. Gosh, he's been dead 25 years. Stochastics is good. It shows you overbought and oversold, and that's what people think it does. But let's say percent K gets up above 90 and they say, oh, it's overbought. Well, it can stay overbought in an uptrend for months. And so overbought and oversold don't mean anything. They're meaningless terms, I think, when it comes to decision making. Did I beat that to death?
Greg, I learned candlesticks by reading your books, as well as Steve Dixon books, and the main work of Homa Luna. He's the Fount of Gold, the Free Monkey Record of Money. But I'm curious, how did you learn, and when did you first become interested in using candlesticks?
Well, that's an interesting story. I had a very good.
Why are you here?
You want me to spike that now? No, I had a very good friend, Japanese friend, Takehiro Hikita. He was a customer of mine, and he invited me to Japan back in the late 80s. And we did onsen, and we talked about the markets, etc. We talked about candlesticks. It's called Hiroshi over there.
Why the name is different here from the West? It was not supposed to be candlestick.
No, they just have a different name for them, but they're basically the same. A Japanese contingent was at the Market Technicians Association at the Camelback Inn in the late 80s in Phoenix. And they introduced it, and I found it very fascinating. Of course, I was in the software business with Norm North at N Squared, and we decided to write a software program. We called it Candle Power, and it drew candlestick charts, and then we identified all the various patterns that were in the Japanese books. We went through. I bought all the Japanese books they had. I couldn't read much of them, but I could see the pictures, and we wrote software called Candle Power. And of course, that led Probus Publishing approached me and asked me if I would write a book on candlesticks. And I said, I don't have time. And they said, well, it'll probably sell a lot of software. And I said, well, let me think about it. So I wrote a book called Candle Power. And then John Wiley bought Probus, and they wanted to do a second edition. So we changed the name to Candlestick Charting Explained. And I just did a ton of research, statistics on patterns, and I was very blunt about it. I wasn't trying to sell people on candlesticks. I was trying to educate them on them. I showed them the good things about candlesticks, and I showed them the bad things about them. They don't all work. Some work better than others. And I went through just literally piles and piles of statistics trying to show that you need to use carefully. And I said, use them with something else. For instance, if you use percent K stochastics, and let's say it gets above 80, and then while it's above 80, and you have a bearish candlestick pattern appear, you've got some evidence that may be the topping point. Not a guarantee, and that's why everything I've ever done has stop loss levels. Everything. I've never made an investment in the last 25 years without a stop. And you have to be disciplined to execute those stops. I tell people, if you're not, file your stop with your broker. Tell him to execute it. I got off subject there a little.
So talking about this, you asked a question for this Japanese trader, Mr. Takehiro Ikita. Is the name?
Yes.
Takehiro Ikita. And I will repeat that same question you asked him for you. Which candle patterns seems to work best and worse for you? Could you list some of them?
Well, this is going to be disappointing, but I never traded with candlesticks. It was a giant research project of mine, and we wrote software for it. And like I said, the Candlestick Charting Explained book still is a huge seller, and it's been out for 34 years. I tell people that book keeps me in cigars, beer, and golf clubs. But I've never traded with candlesticks because that's a very short-term trading vehicle, and I never was a short-term trader. I was always a trend follower.
So do you think candlestick charts still work these days? Why do people misunderstand the candlestick patterns? What advice would you offer to trade with candlestick analysis?
Well, I think I would learn which ones have good statistical reliability. Many of them don't. I think a single candlestick is kind of foolish. Some of the more complex patterns like morning star, evening star, all of those, they at least show a change in sentiment as the candlestick evolves, and that kind of change in sentiment can kind of show you a change in market direction. But one day candlesticks, that's foolish. And like I said, I've never traded with candlesticks. It was a giant research project.
You said that technical analysis offered unbiased truth about the markets. That technical analysis is the art of analysis that keep your emotions from being a part of your investment decisions. It's primarily used in two ways, predictive and reactive. Talking about prices analysis, why do you think traditional technical tools as Fibonacci numbers, cyclical events, and Elliott waves do not work? Don't you use any kind of these trend lines?
Well, if you took 5 Elliott wave people and asked them what the current market is doing, you'll get 12 answers. It's too subjective. It's entirely too subjective. Elliott wave is, and Fibonacci is. That's almost comical. Fibonacci was a 15th century mathematician, and he was asked to come up with a formula for the propagation of rabbits. Well, and he started at 0. Well, I think if I were going to do something with rabbits, I'd start with 2. But anyway, you can take Fibonacci numbers, which is 1 plus the square root of 5 divided by 2, and you can start with any number. And I tell people I like to start with 2 and 19 and then expand them in the Fibonacci sequence. 2 plus 19 is 21, 21 plus 19 is like that. And you get up to 4 digits and then divide the last one by the previous one and you'll get 0.618. And people say, well, why did you use 2 and 19? I said, well, 2 B is the second letter in the alphabet, and S is the 19th letter in the alphabet. I didn't mean to turn this into an X-rated interview.
No problem. Yes.
Nice.
You wrote a book of market breadth. Your friend Tom McCann likes to say the breadth arrives at the party on time, but always leave early.
Yes,
What could you say about breadth and market tops?
Well, let me, there's a very good example. Almost all indicators are price-based and capitalization weighted. In other words, the NASDAQ, which is a couple thousand stocks, the NASDAQ 100 accounts for probably 95% of all of the NASDAQ. And the top 10 stocks in the NASDAQ 100 account for almost all of the NASDAQ 100 movement. And they're all capitalization weighted. So when the markets go up and then appear to be rolling over, people have a tendency to move to less risky positions. And by doing that, in other words, they believe they need to stay in the market, they're moving into large cap and blue chip stocks. Well, that just drives those prices higher when they do that. Breadth, on the other hand, deteriorates. You will always see that signature at market tops. Breadth, where it treats every stock equally, will deteriorate before price will at market tops. That's your first warning sign that the market is topping, when breadth starts deteriorating. And I don't mean 1 or 2 days, I mean over a period of time. Does that make sense?
Yeah.
Yeah.
Talk about this. Now, interest rates are rising. Oil is above 90. Gold is close to 2,000. What's your current view about the actual market, where just a few mega techs are outperforming the broad market? Do you think markets have changed?
Well, I have to be just kind of blunt about this. I don't look at any of that stuff. It's just noise. All it'll do is mess your thinking up. Turn the television off. Only watch Flavio's interviews, and then do your own.
But I don't make forecasts.
If you do make forecasts, make a bunch of them, and only remember the ones that worked out.
Yeah, nobody remembers. Where be the dollar? Where be the euro? Nobody knows.
Yeah, no, it's people waste a lot of time. You watch the media, the experts, and they're always they talk with their hands. They've taken a course on how to talk with their hands and move around, and they just jabber away. And I think that before anybody gets on television to express his opinions of the market, he needs to show his last 5 year audited track record of investing. And I'll tell you what, that'd get rid of 95% of the experts.
Probably.
They're just talking heads.
Probably more.
Yeah, the CNBC's got one of them that's just almost a clown. I won't mention his name.
No, yeah. Nobody knows it.
Thank you for that.
So you are known as a trend follower, a trend dancer. How does your dancing with the trend models works? Could you explain better how to create a rules-based trend-following investment strategy? Have some checklist rules or guidelines?
Basically, I have a number of primary indicators, 9 of them actually. 7 of them are breadth-based indicators, a little more complex than like the advanced decline line, but like McClellan summation ratio is an excellent. And if I had to pick one technical indicator, one single indicator, that's what it would be. His father Sherman and his mother Marion created that a long time ago, and it's a very good technical indicator. I kind of got off track there. Help me get back on track. What was the question?
The question is, how do you have some checklist rules or guidelines to make a rules-based trend-following investment strategy?
Yeah, you have to come up with trend-following indicators, And one of the things that people forget when the market measuring trends is there is a time element involved. In other words, it has to go from A to B over a certain period of time to be in an uptrend. If you don't have a rule like that, then just one update you could just say that's a short uptrend. Well, you can't trade off of that. So you have to have a time element. In other words, over a period of time, 5, 6, 7 days, if the price has gone from A and B to go up, and it will not go straight up, it zigzags to get up there, but that's a good solid uptrend. Same thing with downtrends. And so you come up with measurements for these trends, and then two other things that are critically important. You have to have rules. I have stops on everything I buy. I managed over $6 billion at one time using this model, and we have stops on everything. In other words, we get out of the market. That goes against modern finance all day long. Actually getting out and going into a money market fund, that's just, people just look at you and say, that's crazy. I said, look, if you're minimally capitalized for retirement and you're buy and hold and you ride a bear market down, you're going to go down faster than the bear market. And when that market finally starts going back up, you're just going to go sideways because you're pulling 6% out a year to live on. You're not, you destroyed yourself. And so people need to learn that there's a time to be out of the market. Now, there's the other side of the coin is playing the short side. Well, I never did that. And I never did leverage. I just figured it was compounding the situation. It works great when you're right. It works just as bad when it's wrong. So I never leveraged, and I never compounded things like that.
Greg, you said once, I have an opinion on the market because I have been doing this a long time, but it has nothing to do the way I manage money. Do you think that it's important to have discipline and use a plan to risk? How do you manage risk?
You manage risk by having a process and the discipline to follow it. It's just that simple. My model is, I had 12 people working for me in portfolio management, and I said, you don't have to do any thinking. You just have to follow the model. The model tells you when to get in. It tells you when to get out. It tells you what the rules are. For instance, we never bought in the first hour of the day because the volatility is so high. And then as the funds got bigger and bigger, we didn't buy in the last hour of the day because we wouldn't get good execution time. Those sound like funny little rules, but you have to have, when you're managing that kind of money, you have to have those kind of rules. And you can go back and cherry pick the rules, but if you don't have the discipline to follow them, there's no point in making them. It's that simple. You must have that discipline. And I always tell a story when I was traveling around giving speeches about risk. I said, let's play a game. It's $10 to play. You can play it as many times as you want. And if you win, you'll get $1 million. And the honest mathematical odds of winning are 5 times out of 6. How many want to play? Well, everybody raises their hand. You didn't ask what the game was. It's Russian roulette. You know what Russian roulette is? You take a revolver and spin it with one bullet and boom. No one's interested in playing that game. So always ask what the risk of playing is.
Greg wrote in a StockCharts.com article, study technical analysis to get knowledge. Knowledge is knowing a tomato is a fruit. Wisdom is not putting one in a fruit salad. Wisdom comes with experience. So Greg, what's your final advice would you give to younger traders?
Well, be disciplined, extremely disciplined. And I have to be honest, some people are gifted traders. Linda Raschke was a perfect example. She's just a gifted trader and a good friend. I was not. That's why I had to come up with a process for investing, trend following. Find out what makes you comfortable and lets you sleep at night. If you're making investment decisions that have you all nervous and everything, then you're doing something wrong. When you have stops, you don't have to worry about it. It takes care of you. And when you have a process that has proven itself over years and years and years, then you can relax and assume that it's going to continue to work. The markets aren't changing. Everybody talks about the markets are changing. They don't. They still trend. They trend like they always have. There are periods of whipsaws, but that's just part of the baggage you have to carry as a trend follower, is to deal with the whipsaws. So find a system that you're comfortable with. Find a system that will give you the results that you're looking for. Everybody says, "Oh, you can't beat the market." Well, if that's a dumb game to play anyhow, because the market is always in the market. I think when people learn that you can actually get out of the market and get into a money market fund during bear markets, and when the market does start back up, you're starting back up at a much higher level than the ones that rode that bear market down. So discipline, discipline, discipline.
And we come to an end of this astonishing interview with Mr. Gregory Morris. We want to thank you all, our viewers, for joining us on this journey.
I don't have words to express how happy and to express my gratitude to Greg and his wife Laura for generously sharing their histories and impressive achievements with us. We hope that their accomplishments and commitment serve as a source of inspiration for other traders. Thank you very much, Greg.
Thank you, Greg.
Thank you.
Thank you, everyone. We see you in the next interview.